Very good morning from London. Welcome to the RANsquawk European morning briefing for today, Tuesday, the 4th of October. Another European morning session which has been dominated by risk-averse trade. At the open, not to focus on the comments from the Euro area group yesterday. EU's Juncker confirming that they have postponed the October 13th decision on the next Greek aid tranche for €8 billion. No date has been set for when the decision will be made. Also some comments from Juncker regarding private sector involvement, noting that technical revision discussions are ongoing regarding private sector involvement, so we could see some greater haircuts taken by Greek bondholders. On the plus side, they did note that the Finnish collateral agreements regarding Greece do seem to be finalised. This was echoed by the Finnish finance minister this morning. However, at the open we saw bunds gain some traction, equity markets again trading down, the DAX currently trading down around 3%, also some further pressure on the euro area currency. Financials again coming into focus with Dexia back into the spotlight following yesterday. The latest reports in the press note that Dexia may be split into the good and bad banks, with the current liabilities of Dexia more than their equity holdout, and therefore Dexia shares currently trading at down 30% midway through the European session, before being bounced and risk appetite being supported slightly by the French finance ministers saying they will guarantee Dexia and the Dexia creditors. We did see a slight bounce in risk appetite on the back of that. However, this was quickly reversed when Deutsche Bank come onto the wires in some further bad news. They cut their forecast for this year, saying that their pre-tax target of €10 billion will not be met, and also that it increased risk aversion. Again, DAX plunging at one point down 3.5%, Deutsche Bank shares individually falling 8.5% on the session before bouncing back slightly. However, risk aversion is a dominant theme. Looking elsewhere in the 10-year government bond yield spreads, we have seen some tightening. There is some further market talk that the ECB securities market programme is back into the Italian curve specifically. However, following the results yesterday, we have seen some diminishing returns from the ECB securities market programme as it has moved forward. In the currency space, just keep an eye on the Kiwi currency. The Goldman's note overnight has helped support the Kiwi currency in trade, still trading up in some minor positive territory, whereas most of the other currencies across the Eurozone and the dollar-related currencies have seen some selling pressure as the dollar has come back off its lowest levels overnight. Particularly the Aussie currency, where the RBA kept the key rate unchanged last night at 4.75%. That Aussie currency particularly weak, Aussie dollar trading below 95.00 to the downside. Moving forward then into the rest of the session, we do have comments out of both Bernanke and Trichet scheduled, so be keeping a close eye out for that, with it being Trichet's last press conference on Thursday. Possible comments from Fed's Ratkin in the US session. In terms of data, there will be the US factory orders and the US durable goods data, and also looking out for the next part of the Operation Twist scheduled for later on in the US session. But that's enough from me. Have yourselves a great trading day.